how do you think RBI thinks about liquidity or manages liquidity in the background of the need for currency intervention, as you also managed about the rupee, in your macro update? So how do you think RBI thinks in the background of currency intervention? And sometimes there are very stark movements in the bond yields where they could come in. So, and liquidity is impacted by any of these actions. So how does RBI manage?
So if we want to simplify this,
Yes.
currently RBI is enabled to kind of go behind the growth. So it is driving the liquidity, or it is driving everything in a way that supports growth, given that inflation is benign. Now in that perspective, RBI has mentioned that they will continue to keep sufficient liquidity. Now, how do they define sufficient liquidity? It's 1% of NDTL. If you add banking system liquidity and government balances, there is something called, we can arrive at core liquidity.
Yes.
So RBI wants to ensure how much is banking system liquidity, which I said is they want it to be close to 1% of NDTL.
Yes.
And how much does a core liquidity number should be, right? And I think my sense of that number is that it should be closer to 1 to 2% if we include both of these numbers. RBI is doing its action in such a way that this core liquidity number is maintained between 1 and 2%. Now, obviously, there are frictional reasons as to why this liquidity can go up or down. RBI uses short-term instruments if it feels that that is more appropriate at times, which is like repo and reverse repo windows in order to cushion those liquidity. The only the counter thought to this liquidity measure is if the rupee is kind of depreciating the way it is, it does confuses the situation, because if you want to control the rupee depreciation, then you want tighten liquidity. But here I think RBI is trying to arrive at a fine balance in terms of where it wants to see rupee, right? In terms of how it wants the rupee to kind of determine its path without managing any level on rupee. And at the same time, it also ensures that growth is not hampered, right? Which means generating banking system liquidity through durable means. We saw that a lot of measures were announced post last policy. We already had 1 lakh crores of OMO being announced in the month of December, along with $5 billion Forex swaps. Being the month of December, the demand for liquidity was also high. We had a huge advanced tax outflows. We have a huge GST number. Currency in circulation again starts picking up from December onwards, right, going into the month of March. And RBI is pretty well aware of this.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.